Hi, everyone. This is Jeff Praissman with Interactive Brokers Podcast. It's my pleasure to welcome back to the podcast studio Scott Bauer from Prosper Trading Academy. Hey, Scott, how are you?
Jeff, we're hanging in there. There's some concern out there, but everything is good and we're hanging in there.
Yeah, I was going to say it's been a rough week for the market, right? With the S&P 500 and Nasdaq, falling below their 50-day moving average for I think the first time in over 130 trading days. Dow Industrials experiencing their worst 3-day drop last week since April. Scott, is all this tech related, or are there, other sectors or factors contributing to the drop?
Certainly tech is a major part of this, right? Because of the concern about AI valuations. But if we dig a little bit deeper, we look at some of the consumer type stocks and we look at retail and we look at some of the payment processors, and those spaces are not doing real well either. And I think that is really contributing to the overall, let's call it, I don't want to say bearish sentiment, but some of the negative sentiment that's out there. And then, of course, you get Target coming out and saying, "Oh boy, we're really concerned about, the holidays coming up here." But I think we still all have to keep in mind, Jeff, that, we're still 3% off the top, right, of the
Right.
market here. So I think we have to keep that in check.
Yeah, I mean, when you take a step back and actually look at the way the market is overall, it looks pretty good overall.
Yes.
Yeah, there seems to be a little, kind of, I won't say controversy within the Fed, but a little, I guess, disagreement, I would say that, the Fed's vice chair, Philip Jefferson, he came out as, backing lowering rates slowly. And there's, obviously there's some people kind of on the opposite side of that, but, how are bonds doing in this environment? And, how have they, performed overall for the year?
It's so interesting because if you look at the 10-year, so since the end of October, really, 2 to 3 weeks or so, we saw the 10-year rally above 415, down from where it was under 4%. Now it's just kind of hovering around that 410 to 412 area. I'd say there's a lot of jitters out there based on the daily rhetoric, the daily news flow from the Fed. If you go back a year, like to the beginning of December last year, the 10-year is almost in the exact same place as it was at this time last year. So I think that some of the volatility in the bond market has calmed down a little bit, but the anticipation of what the Fed is going to do, that could be a very big precursor to maybe an outsized move coming up here. Though we know that we've seen when the Fed has recently cut, we've actually seen the 10-year really sell off and rates go higher a bit. So, I think there's still so much. It is like what Jefferson said, some people want to lower rates slowly. Some are more in the camp of we got to, cut again in
Right.
December. And that's so reflective of the market of, 2 weeks ago, 90+% that they were going to cut in December. Now it's basically 50-50.
And, next week we have a shortened week. We have off for Thanksgiving. We have a half day Friday. But, we kind of touched on this last week in our podcast, but, plenty of data coming out,
Yes.
just in housing alone. We got the, cost of housing index in the next few days, the, housing market index or HMI, and revised building permits and, residential sales. What effect could this have on the market?
Typically, and back in the days of trading down on the floor, which wasn't that long ago, this was one of my favorite weeks of the year because a lot of traders would take off. Volumes typically were lighter, which meant that maybe spreads were a little bit wider, a little bit more, volatility because of that. But I think it may be different next week. I think because of the deluge of news, the eco data that we're going to get, you're going to have a lot more people. When I say people, not just traders on the floor, but institutions and stuff really focusing in on that data last week or next week. So I think we could see some actual really heightened volumes next week because of the anticipation of all this data coming out. And we have to remember markets closed on Thursday, only a half a day on Friday. So that can add to some of the volatility.
And, kind of piling on just this economic data, that short week, we actually have like several companies releasing earnings as well.
Yeah.
I mean, obviously we have, NVIDIA today, tomorrow we have Walmart and Intuit, BJ's Friday and, Alibaba next Tuesday. So actually even a lot of retail companies too with Walmart and BJ's, how could this kind of to your point, like this may not be a quiet holiday week for any of these traders, right?
Not at all. And, everyone obviously is looking at NVIDIA earnings, which absolutely can be a big mover to the market. But I think Walmart's really important, especially after what we heard out of Target let's see what they have to say, because Target was pretty downbeat on the consumer, I think. And if Walmart has that same kind of guidance or outlook, that could be very troublesome. I don't expect that they will. I really don't. I think Walmart can be a big, boon off of the Target news here. But yes, there is no shortage of events coming up here. So, most of these companies, like you said, the retail, this could be a good indicator of, how the consumer approaches Black Friday and the holiday season next week. So hopefully this will all be on an upbeat note. But yes, there's a lot of news coming out.
Yeah, no, I could definitely see a scenario with a lot of those Target shoppers are going to Walmart now
Agreed.
instead. I think that's a very realistic, potential. Scott, this has been great as always. Love having you come by the studio. And for our listeners, to get more from Scott, go to prospertrading.com. Also can find his past podcasts on our website, as well as webinars and news articles. Scott, thanks again. Looking forward to next time.
Appreciate it, Jeff. Have a great holiday next week.
You too. Thanks.
Thanks.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice.